Ladies and gentlemen, good day and welcome to the maiden investor call of Shriram Pistons and Rings Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ridhant Kapoor from Ernst & Young LLP. Thank you, and over to you, Mr. Kapoor.
Thank you, Michelle. A very good afternoon, everyone, and thank you for joining in on the maiden investor call of Shriram Pistons and Rings Limited. I am Ridhant Kapoor from Ernst & Young LLP, and we are the investor relations partners for Shriram Pistons and Rings. To give you all an overview of the company and its performance, we have with us Mr. Krishna Kumar Srinivasan, Managing Director and Chief Executive Officer, Mr. Prem Rathi, Executive Director and Chief Financial Officer, and Mr. Pankaj Gupta, Head Legal and Company Secretary. The company's investor presentation has already been uploaded on the stock exchange as well as on the company's website, and we hope you all have had an opportunity to go through the same. Before we begin, I would like to draw out the fact that for the purpose of today's call, we shall be referring to the released financial results for the quarter ended 31st December 2023. We would humbly request you all to stick to these financials and refrain from asking any questions related to the full year performance. Also, let me remind you that this discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It may be viewed in conjunction with our business risks that could cause future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. Now, I would like to hand over the call to Mr. Krishna Kumar for his opening remarks, post which we will open the floor for an interactive Q&A session. Thank you, and over to you, sir.
Thank you, Ridhant. Thank you, and good afternoon, everyone. On behalf of the company, I would like to express our sincere gratitude to each one of you joining our maiden investor call today. Being it our first interaction with the investor and analyst community at large, I would like to take some time to establish who we are and what we do for those who might be new to our company. The company was incorporated in 1963 in the name of Shriram Pistons and Rings Limited and was taken over by our founder, Dr. Charatram, in 1972 and renamed to Shriram Pistons and Rings Limited, or SPRL as we call it today. Dr. Charatram played a significant role in shaping the Indian industry, was a pillar and the face of the Indian industry for a long time. He made history by bringing the Honda Genset and Honda cars to India under joint ventures and also built SPRL into the leading manufacturer of pistons, piston rings, piston pins and engine valves. This success is attributed to our rich heritage spanning over 5 decades, marked by numerous achievements including technology collaborations with international leaders and establishment of our Advanced Technology Center. Before delving into these aspects, let me provide an overview of our business model. We manufacture pistons, piston pins, piston rings and engine valves for almost all the leading OEMs and aftermarket distribution in India, as well as for exports. Our products are marketed and distributed under our well-known, renowned brands, SPR and Usha. Both the brands are very well recognized both domestically and globally. We manufacture our products in 4 facilities, 2 located in Uttar Pradesh in Ghaziabad and Bulandshahr, 1 in Rajasthan in Pathredi, and 1 in Madhya Pradesh in Pithampur. Our manufacturing lines are fungible, which means that we can produce the respective products on earmarked lines based on changes in demand for a specific segment of the auto industry. This gives us the added advantage to be able to cater to demand effectively and optimize our operations. Please also note that our Madhya Pradesh unit comes under our wholly owned subsidiary, SPR Engineers Limited, we call it SEL. Apart from these, under SEL, we also have 2 more facilities which I'll be talking about later. To cater to our major OEM customers and to ensure that we meet the just-in-time demands of our customers efficiently, we have set up 5 assembly units in Haryana, Uttar Pradesh, Maharashtra, Tamil Nadu, and Gujarat, where most of the OEMs have their manufacturing setups. As a company, innovation is in our DNA, and we have always focused on improving our products and been able to provide complete and comprehensive solutions for the high technology new generation engines. We accomplished this feat via our ultra-modern state-of-art technology center established in 2014, which serves as a comprehensive product development facility. Our technology center holds recognition from the Department of Scientific and Industrial Research, Government of India. Within this facility, we have also developed solutions for green hydrogen, flex fuel, and natural gas engines, positioning us well to adapt to evolving industry trends. At this facility, we even do engine testing for our customers. Our access to cutting-edge technology is complemented by 4 long-standing technology collaborations with prominent global leaders in the automotive components sector. Our longest-standing partnership dates back to 1972 with the Kolben-Schmidt Group, focusing on piston manufacturing. Additionally, since 1989, we have maintained a partnership with Honda Foundry, Japan, for pistons specific to Honda requirements globally. Our collaboration with Riken Corporation from Japan, established in 1978, pertains to rings production. And the one with Fuji, Japan, established in 1993, revolves around engine valve technology. These strategic partnerships over decades, combined with our extensive manufacturing acumen and expertise, have really propelled us to our current position of prominence. Now moving to the segments we cater to. A large chunk, approximately 81% of our standalone revenue in FY23, was from the domestic market, including business from OEMs and aftermarkets, where we cater to a diverse range of product segments like the commercial vehicles, the passenger vehicles, tractors, 2- and 3-wheelers, off-highway vehicles, industrial engines, railway engines, and for various defense applications. We have a solid market presence across all these product segments and have enduring relationships with all the prominent players of these segments. Our list of market clientele includes the giants of the auto industry, namely Tata's, Maruti Suzuki, Mahindra's, Bajaj, Hero, Eicher, John Deere, Escorts, Kubota, Cummins, Honda, TVS, Ashok Leyland, Bharat-Benz, Hyundai, Renault, Nissan, ITL, TAFE, and CNH, among others. Regarding our export activities, which contribute 19% of the standalone revenue in FY23, we hold the leading position as exporters of our products with a presence in over 45 countries spanning 5 continents. We maintain enduring supply agreements with our key customers who are prominently OEMs on a global scale with Volkswagen, Jaguar, Land Rover, BMW, Honda, Fiat, Fuso, Caterpillar, Wabco, Renault, AGCO, Suzuki, Kubota, Cummins, Yanmar, and Perkins are some of the leading global OEMs that are our key customers and have been there for a long time. Now that we have established ourselves as a leading manufacturer of pistons, rings, pins, and engine valves globally, you may think if we are doing anything to augment our growth further. And I'm happy to share that we definitely are. We are diversifying our product portfolio and moving into newer segments, which would ensure that we continue growing in the long term and continue to de-risk our business model. Through our wholly owned subsidiary, SPR Engineers Limited, SEL, we have recently made 2 acquisitions. The first one is the acquisition of a 66% stake in EMF Innovations Private Limited. We call it as EMFI. EMFI is a young technology company operating in the electric vehicle space, EV space. We leverage Singapore's strong power electronics research base and India's extensive manufacturing ecosystem to deliver cost-effective and reliable electric motors and controllers for green mobility applications. Through our R&D and manufacturing facility in Coimbatore, Tamil Nadu, we manufacture electric motors and controllers which have applications across passenger vehicles, 2- and 3-wheelers, commercial vehicles like buses and trucks, and also for various other applications. Through this acquisition, we have marked our foray into the EV component segment. We will be amongst the top few companies supplying electric motors and controllers together, sized for specific applications for our customers. We have capabilities and capacities to manufacture motors and controllers for applications ranging right from 250 watts to 300 kilowatts across all segments. We are in the process of building a state-of-the-art manufacturing facility near to our existing facility in Coimbatore. Moreover, to further augment our technical capabilities, we also have technical collaboration agreements with GLE Motors and Lingbo Controllers, helping us in developing certain India-related applications and in line with the Government of India drive towards Atmanirbharta. Another acquisition that we have done recently is a 62% stake in Takahata Precision India Private Limited. We call it as TPI, in October 2023 for high-precision plastic injection molded parts for automotive applications. TPI has technical collaboration with Takahata Japan, which is a leading high-precision injection molded parts manufacturing company globally. TPI has a state-of-the-art manufacturing facility in Nimrana, Rajasthan, which enables TPI to conduct end-to-end operations right from designs to manufacturing to inspection, all under one roof. These acquisitions of EMFI and Takahata mark our foray into ICE-agnostic products. As an outcome of all our efforts over the years to ensure that we provide only the best quality products to our customers, the company has received several awards from various industry bodies. The Sword of Honor from the British Safety Council, the Gold Award in Exports from the Federation of Indian Exports Organization, FIO, the Lakshman Rao Kirloskar Award for Best Foundry of the Year by the Institute of Indian Foundrymen, and various other awards from CII, ACMA, Engineering Export Promotion Councils, and others. Other than this, we have also received several awards from OEMs from across different segments like passenger vehicles, 2- and 3-wheelers, commercial vehicles, and other areas. In 2022, we were amongst the top companies to have received the Golden Peacock Award for Excellence in Corporate Governance from IOD in a function held in London. Also in 2022, we challenged the TPM Award again for the third time and ensured that we cleared the TPM certification, which was won by us from Japan Institute of Plant Maintenance, JIPM. At the heart of our organization lies the conviction that our team is our greatest strength. Anchored by a robust leadership team, we benefit from seasoned professionals, some of whom have been with us for over 30 years, fostering a deep-rooted commitment to our mission and values. We have implemented a meticulous system to identify and nurture the top talent, ensuring a continuous influx of skilled individuals who align with our vision. Moreover, our investment in cultivating a strong leadership pipeline ensures a sustainable succession plan and fosters innovation. Providing invaluable oversight and guidance, our expert board of directors enrich our strategic decisions, propelling us towards excellence and enduring success with speed. We are also committed to being a responsible corporate citizen and have embedded sustainability in every realm of our value chain. We have achieved several milestones in our ESG journey, like 3 of our plants having the status of zero liquid discharge and state-of-the-art ETP and STP. Further, we have achieved a 20% reduction in Scope 2 emissions, a 20% increase in the mix of renewable energy, solar power and wind power, and a 30% increase in the use of recycled material. We are also very active in CSR and run various campaigns which have positively impacted more than 90,000 beneficiaries collectively. In terms of governance, we are stringent and have strong corporate governance frameworks in place, duly demonstrated by the Golden Peacock Award that I stated earlier. That is more or less all about our business. I hope you all have a better understanding about it than before joining this call. Now allow me to spend some time on taking you through the industry and where it is headed. India's auto component sector plays a pivotal role in driving the growth of the automotive industry, both domestically and globally. With a rich ecosystem of manufacturers, suppliers and innovators, India has emerged as a key player in the global automotive supply chain as global OEMs seek to de-risk their supply chain. According to the industry reports, the Indian auto components industry is expected to grow at a 15% CAGR to reach approximately $200 billion by 2026. The engine components, the segment we operate in, will continue to hold a major chunk in the future as well. Our country boasts a robust network of auto components manufacturers renowned for their quality, reliability and cost effectiveness. From pistons, engine valves to electronic components and safety systems, Indian companies produce a diverse range of components that are integral to vehicles. The push of the government like tightening norms to get the industry in sync with global standards and their focus on schemes like Make in India bodes well for our industry. I would also like to draw attention to the electric vehicles industry since we have marked our foray into EV as well. The EV industry is experiencing a transformative shift driven by the urgent need to mitigate air pollution and embrace sustainable mobility solutions. With a growing emphasis on clean energy, the adoption of electric vehicles has emerged as a key priority for policymakers, industry stakeholders, and consumers alike. We anticipate a continued rise in the penetration of electric vehicles, supported by the ambitious targets set by the government. Proactive measures including incentives, subsidies, and investments in charging infrastructure are being undertaken to expedite the EV adoption, fostering an ecosystem conducive to widespread integration. While we project a long-term growth in the EV sector, there are certain challenges which would impede vertical growth. These challenges encompass high battery costs and addressing of the power infrastructure limitations. Moreover, from a sustainability standpoint, the impact on the environment has to be understood from a well-to-wheel perspective. The significant surge in demand, especially with a fleet of over 150 million vehicle park across categories, underscores the necessity for substantial power generation infrastructure development from sustainable sources, a process that will unfold gradually in line with the government push. Additionally, I would also like to highlight that the emergence of EV imports from China and the adoption of Indian applications poses unique considerations as the Indian market demands larger vehicles tailored to accommodate families. Recognizing this, our investment in EMFI reflects our commitment to developing customized solutions grounds up, aligned with India's demographic realities. Amidst these developments, the conventional internal combustion engine and the industrial engines in its various forms are looking towards greener solutions like hybrid, CNG, LNG, hydrogen-powered vehicles, HCNG, where hydrogen is blended with CNG, and other flex fuels. And we believe that these engines, along with EV, are poised to coexist to meet the inherent demand of the growing market. Now, I will just quickly take you through the key standalone SPRL financial highlights. I would like to highlight that we will only be discussing about the released financials and will not be giving any guidance on future performance on this call. In the last few years, we have worked with a huge amount of focus on increasing the productivity in all our business functions, improving the quality of our products, while also working and improving efficiencies in terms of the speed and execution of our operations. All these factors have enabled us to achieve positive results in the last few years that are sustainable and give us the confidence to continue to perform well in the future as well. Let me give you some highlights on the historical financial performance so far. You can also refer to all our financial performance results in the presentations that is uploaded already on our website. Revenue from operations have grown from rupees 16,068 million in FY20 to rupees 26,050 million in FY23, a CAGR of 17.5%. During the same period, EBITDA grew at a strong CAGR of 36.2% from rupees 2018 million in FY20 to rupees 5097 million in FY23, and the EBITDA margins expanded from 12.4% in FY20 to 19.2% in FY23. Our PAT for FY20 was at rupees 730 million, and for FY23 was at rupees 2956 million, a robust CAGR of 59.4%. Our PAT margin has also expanded significantly from 4.5% in FY20 to 11.1% in FY23. Now moving on to the highlights for the 9 months in FY24 as compared to 9 months of FY23. Our revenue grew by 13.8% to reach rupees 21,724 million from the rupees 19,083 million in the corresponding period of the previous fiscal. Profitability has recorded a strong growth in the 9-month period this year. EBITDA was up by 46.2% year-on-year, was at rupees 5,208 million as compared to rupees 3,563 million in the 9 months of FY23. Our EBITDA margin expanded by 495 basis points to 23.3% in the 9 months of financial year of 24, which stood at 18.4% in the 9 months of financial year 23. Our PAT recorded a robust growth of 60.7%, reaching to rupees 3,262 million in the 9 months for the financial year 24, as against rupees 2,030 million in the 9 months of financial year 23. Our PAT margin stood at 14.6% as against 10.5% in the 9 months of FY23, an expansion of 438 basis points. Our ROE and ROCE as at the end of financial year 23 stood at 19.3% and 23.8% respectively. Our debt to equity remains low at 0.24 times as at the end of FY23. The company is generating positive cash from operations to a tune of rupees 3,992 million as at the end of FY23. We also maintain a robust credit profile with a credit rating of AA stable from India Ratings and Research. We have always been focused to creating value for our shareholders and have been doing so for various years by giving out dividend and bonuses regularly. In this financial year, we have done a bonus issue of shares in June 2023 in the ratio of 1:1. To stress on the fact that we care about all our stakeholders and shareholders, let me give you a quick fact. If we account for all the bonus issues since 1991, a shareholder holding one equity share of our company in 1991 would now have 96 equity shares due to the bonuses we have given so far to all our shareholders. Till date for FY24, we have announced an interim dividend of rupees 5 per equity share. Now, to conclude, I would like to state that we have the right business strategies in place to ensure a long-term success and growth of the franchise. Central to our approach are meticulously crafted core strategies that align with our objectives and market demands. Recognizing the importance of diversification risk mitigation, we strategically engage in mergers and acquisitions to expand our portfolio and safeguard against market volatility, like our acquisitions of EMFI and Takahata. By continuously refining our strategies, we strategically navigate the business landscape, poised for sustainable growth and resilience. As we chart our path forward, our primary focus remains on sustaining the growth momentum, not only in terms of the top line, but also bolstering the bottom line. Amidst our pursuit of growth and success, we persistently uphold the principles of integrity, conducting every aspect of our business with an ethical resolve. With this, I would like to come to the end of my talk, and I would request the moderator to open the floor for questions.
Thank you very much, sir. Thank you. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sunil M. Kothari from Unique PMS. Please go ahead.
Thanks for opportunity, sir. Congratulations for such a wonderful journey during last so many years and starting investor relation and communication. Commendable job you have done. So my first question is on the way you have taken efforts during last 10 years of so many collaboration, technical capabilities, challenges of from ICE to EV and all these things happened global level. And you also mentioned during your talk that the change in supply realignment, supply chain realignment is also a big opportunity. So if you can talk a little bit more about this supply chain realignment in terms of acceptance of global players from the Indian players like you, component supply. So that will be really very helpful.
Thanks, Sunilji. Yeah, of course, when I say supply chain realignment, it is basically, many of the global suppliers are looking for competitive solutions from, I would say, low-cost countries. And we have been pitching ourselves with the, kind of technology backing that we have from all our suppliers, from all our partners. We have all the possibilities of meeting the global demands. And that is the reason why we have been able to now export to over 45 countries globally. And you already heard about all the big names that are already there as our customers and the kind of portfolio that we are already supplying to them. So basically it is a matter by which most of the customers globally are looking for good solutions and good partners who will partner with them and service the last IC engine that's made globally. And we have committed ourselves to that journey.
Mm-hmm. So, sir, it's a now little speedier acceptance of companies like Shriram Pistons and Indian component manufacturer at a global level because of one is challenges from China and second of their cost which is changing. The global players have taken more resources towards EV research and EV development. Some of the reasons should be like this or anything else you can add to our understanding?
No, we have been, I think the major, reason for us to get business is the technology leadership that we have. Unless you have the right technology leadership, you will not be in a position to, be able to supply it globally. So that's the first important reason. The second important part is we have been supplying to global customers for the last now many years, over 15 to 17 years, even before the China issue and China Plus One strategy came into place. So we have been always, tied up with most of our partners and we have been doing quite well with them. And there are some customers with whom we are tied up for the last over 3 decades globally. So it's not, it is the combination of partnership and the combination of, really ensuring that we are able to give just-in-time supplies to all our customers globally. And we do a number of things to make this happen. So that is the reason why we have such a strong partnership with customers abroad.
Great, sir. And sir, last question is, you have done commendable job in terms of distributing very good and reasonable high dividend bonuses, you have created universal value. What you want, in your opinion, what's your thought process